Right, welcome to Excel Class Hub. My name is Mr. Smith, and today we are going to be looking at a topic in accounting: bank reconciliation statement. Now, bank reconciliation statement, there are two things that you need to understand. You know, in JAMB accounting, what you need is the principles and how to apply those principles. The first thing is the bank statement. Bank statements. We are also going to look at what is meant by bank reconciliation statement. Bank reconciliation statement. Also, we are going to look at the reasons for disagreement. Reasons for disagreement. And after that, we are going to be solving some questions under the JAMB pack. All right. So what is bank statement? It's a statement prepared by a bank to show the transactions between the customer and the bank. Don't forget, it's a statement. It's not an account. There's a difference between a statement and account. So a bank statement is prepared by the bank to show the cash flow into and out of the customer's account. Now, your bank reconciliation statement is prepared by the account holder to reconcile the differences between the bank statement received and the cash book. So, in trying to explain bank reconciliation statement, there are two things you must understand. So, I'm going to give you the format for bank statement. You have your date, you have your particulars, you have your debits, you have your credits, then you have your balance. Okay, now your cash book is the bank column only. You know, your 2-column cash book, you have your cash column, you have your bank column. So in terms of bank reconciliation statement, we are talking of transactions that deals with the bank column only. So any transaction that deals with the cash column, we don't need it as far as this topic is concerned. So our cash book is going to be bank column only. Okay, so these are credit side and these are debit side. Now, assuming that you operate a bank account, the name of the bank is what? XYZ Bank PLC. Okay, and in your bank statement, don't forget these are bank statements. These are bank statements, and this is our cash book. In your bank statement is telling you that you are having a credit balance of 1,000 naira, and your cash book that you prepare, you should be having a balance of 1,500. There's a difference between the two. The bank statement is telling you that the money you have in your account is a credit balance of 1,500, whereas in your cash book is a what? Is a debit balance of what? 2,000 naira. So there's a difference. So what you prepare to reconcile the bank statement and the cash book is called bank reconciliation statement. So before we look at the principles applied to it, what are the reasons for disagreement? You have a number of reasons why the bank statement you receive from your bank will not balance with the cash book that you prepare. So I'm going to list the reasons for disagreement, then I will explain it one after the other. Number one, you have what you call unpresented check. Unpresented check. Number two, you have uncredited check. Number three, you have dishonor check. Number four, you have standing order. Number five, you have bank charges. You can also call it bank commission, bank charges or bank commission. Number six, you have dividends. Number seven, you have credit transfer. Okay, number 8, you can have direct debit. Direct debit. Then 9, you have casting error. Casting error. Okay, that's error in what? Addition or subtraction. Then number 10, you can have what? Undercast or undercast. Undercast or overcast, we are going to categorize it under the casting error when I'm explaining. So these are the reasons for disagreement between the bank statement and the cash book. Now, what is unpresented check? Unpresented check is also known as outstanding check. They are checks that has been drawn but is yet to be presented for payment. So, assuming Ade operates UPU bank account and gives a check to Kunle, Ade gives a check of what? 5,000 naira to Kunle to go and present to what? UPU Bank PLC. Okay, now we have 3 parties that are involved. You must understand the parties that are involved in a check. You have 3 parties. The parties to a check are, you have number 1, you have the drawer. Number 2, you have the drawee. And number 3, you have the payee. Very important. Who is the drawer? The drawer is the account holder. The drawee is the bank in which the what? Money is being withdrawn. And the payee is the beneficiary of the check. That's to whom the payment is going to be made. So from this explanation, Ade is the account holder, Ade is the drawer. UPU is the name of the bank, that is the drawee. Then who is the receiver of the money? Kunle, which is the what? Payee. So now, but Kunle that received this check is here to present this check for payment. So it means that what? The owner of the what? Of the bank account has already what? Credited his own cash book with that particular amount. But the person, which happens to be Kunle, is here to present the check for payment. So it's going to lead to what? Disagreement between the cash book and bank statement. So unpresented check are standing checks that are yet to be presented for payment. Number 2 is uncredited check. They are checks that are lodged for payments, but the account is here to be what? Credited. You know, sometimes when somebody tells you that, oh, I want to go and send you money through the what? Through the counter. All right, so uncredited check. They are checks that have been lodged for payment, but are yet to be presented for payment. Check that have been lodged for payment, but the account of the beneficiary is yet to be credited. It's possible that I go to the bank, I lodge a check of payment, let's say 1 million naira. I've actually paid the money, but the cashier is here to credit the account of the beneficiary. So at that particular time, there's going to be a difference between the bank statement and cash book. Then number 3 reason is dishonor check. You have a lot of reasons why a bank may dishonor a check. For instance, irregular signature. When the signature you use to open the account is different from the one on the check. Okay? Then number 2 is that what? If the check is fake, because the first thing they will do is to identify if the check is original or not. And also, when there's a difference between the amount in words and in figure. Now, you give somebody a check, okay? You give somebody a check, and the amount you wrote in figure is 100,000 naira, is 10,000 naira, for instance, and the amount you wrote in words, you write it as what? 100,000 naira. The bank is not going to honor such a check. So when there's a difference between what? Amount in words and figure, they will dishonor the check. Number 4 is standing order. Standing order is a what? Is a written order given to the bank to pay certain sum of money on behalf of his client periodically. An example is insurance premium. Okay? Insurance premium and so on and so forth is an example of a standing order. So if the account holder authorize the bank to pay certain amount of money on his behalf periodically, it falls under standing order. Then number 5 is bank charges or commission, like cost of SMS charges, ATM maintenance, and what have you. They are all examples of what? Bank charges or bank commission. Okay. Then number 6 is dividend. Dividend are the returns from what? From shares that are being bought. So the dividend are not paid to the what? They are not paid in cash. They are paid through the what? Through the bank. So dividend is also one of the reasons for what? For disagreement between the cash book and bank statement. Then number 7 is credit transfer. Credit transfer is a direct what? Transfer or direct lodgement of money from one account to the other. Then number 8 is direct debit. When the account of the customer is what? Is debited directly. Don't forget that when bank is making payment on the customer's behalf, they debit the account. Okay? But when bank receive money on behalf of the customer, they credit the account. But in your cash book, when money is coming in, what do? You debit it. And when money is going out, you credit it. So it simply means that what? The debit side of the bank statement corresponds to the credit side of the cash book, while the credit side of the bank statement corresponds to the debit side of the what? Cash book. That is why when money is paid into your account, the alert that you receive is credit alert. But when you use your, for instance, your ATM card to withdraw money, the alert you receive is what? Debit account. So you can see it now. So, but in your cash book, it follows the golden rule of accounting, which states that what? For every debit entry, there must be a corresponding credit entry, and you debit the receiving account, you credit the what? The giving account. Now, number 9 reasons for disagreement why your bank statement may not agree with your cash book is what? Casting. So casting, you can have what? Payment overcast. You can have payment overcast. You can have payment undercast. Okay? You can also have what? Receipt overcast. As well as what? Receipt undercast. Now, payment overcast and payment undercast. You know that in your cash book, this is our cash book. The debit side here contains what? Receipts. Okay? And the credit side contains what? Payments. Now, assuming that you are owing Oluchi, your company is owing Oluchi 5,000 naira. Okay? Now, you now paid 5,000 naira to Oluchi. But Oluchi now made a mistake to record it as what? As 5,500 naira. That is an example of what? Payment overcast. Overcast means when the amount you pay, or if it is also receipt, the amount you received is what? Is more than. So when the figure is more than, it falls under what? Overcast. When the figure is below, it falls under what? Undercast. Now, in the question you are going to be given, which we are going to solve question, is that you should be able to identify where your payment overcast will be, or your payment undercast will be, your receipt overcast, and your receipt undercast. Now, when you are making a payment and the payment is being overcast, is what? Is an income to the what? To the business. So it's usually on the what? On the debit side. So your adjusted cash book, if you want to prepare, if you want to solve questions under this, in UTME, they will give you what? They will give you question. And they will now ask you, what is the adjusted cash book? So in your adjusted cash book, what are the things you are going to find in your debit side? They are very important. When you don't know what to be on the debit side and credit side, there's no way you can solve question. So these are format for adjusted cash book. Adjusted cash book. Here is your credit side, and here is your what? Debit side. Okay? Now, like I said, your cash book, your debit side contains what? Receipt. So anything that will increase the cash in the business will be on the debit side of the what? Adjusted cash book. You have your balance brought forward. Of course, it will be there. You have your credit transfer. Credit transfer will also be on the debit side. Then dividend. Dividend also will be on the what? On the debit side. Then here, expenses. Okay, anything that will reduce the what? The money in the business will be on the credit side. So that is payment. We have standing order. We have bank charges or commission. Bank charges. We have direct debit. direct debit. Okay, so this will be on the debit side and this will be on the what? On the credit side. So always take note that in your adjusted cash book, what you have on the credit side are all expenses. What you have on the debit side are what? Are income. So you will be given questions, just a very few questions, and they will ask you to what? Identify either the balance as per bank statement. Now, after you have adjusted your cash book, okay, now let's assume that the debit side is more than the credit side. You are going to have what you call your balance carry down. Okay, if your balance carry down is on the credit side, your balance brought down will now be what? On the debit side. After that, you now have your what? Bank reconciliation statement. After you have adjusted the cash book, the next thing is to prepare the what? Bank reconciliation statement. So you now have bank reconciliation statement. You put your naira. You have balance as per adjusted cash book. Okay, this balance here is what you are bringing down here to your bank reconciliation statement. Then what's the next thing you do? You add unpresented check. I've explained to you what unpresented check is, and I told you that unpresented check is also known as what? Outstanding check. Then you now subtract less uncredited check. I've also explained what uncredited check is. Okay, you less your what? Uncredited check. So the total here is your what? Is your balance as per bank statement. So after you have adjusted your cash book, the next thing, the total balance will now be your what? Your balance as per bank statement. All right, so we are going to be solving some few questions now. All right, so we are going to be solving the first question under bank reconciliation. We have balance as per cash book 13,560, unpresented check 5,120, uncredited lodgements. Uncredited lodgement is also known as what? Uncredited check. You know, while I was explaining uncredited check, I said there are checks lodged for payments, but the account of the customer is here to be credited. So that's why you see it as uncredited lodgement. So it's the same thing as what? Uncredited check. And that's 2,300. Dividend received not entered in the cash book, 2,000. Bank charges, you can also see it as bank commission, 280. They are standing order payment, 600. Now, what are we asked to look for? Balance as per bank statement. All right, we are going to be solving this question, as you can see here, 2023. This same question, we are going to use to solve question 23 and 24. Okay, so the first question is this. From this question, we are asked the balance as per bank statement. Now, what are you going to do? It's very simple. The first thing is to what? Is to adjust the cash book, because there are transactions here that what? That is in the cash book. So you have to adjust it first before you can what? Know your balance as per bank statement. So quickly, adjusted cash book solution straight away. Adjusted cash book. This is your debit side and this is your credit side. Now, what are the income? Like I said, income will be on the debit side. We have balance as per cash book. That will be our balance brought forward. Balance brought forward or balance brought down, which is what? 13,560. You look at the dividend. Dividend will increase the amount you have in your bank. So it's going to be on the debit side. We have dividend, which is 2,000 naira. Okay, that is all. So the next thing will now be what? The items that what? That will increase your expenses in the cash book. The first one here is what? We have bank charges. Bank charges. Bank charges is 280 naira. Okay. Then we have standing order payment. I'll just write it as standing order. Standing order, which is what? 600 naira. Okay. Now, looking at this, you can see that your debit side is greater than the what? Credit side, meaning that the income side or the receipt is greater than the what? Payment. So what do? Let's add this. 13,560 plus this will give us what? 15,560. Then we have our balance carried down. What we have here is what? 880. So we have to subtract 15,560 minus 880. 15,560. 15,560 minus 880. And that will give us what? 14,680. 14,680. So our balance carried down is what? 14,680. So that will be balance brought down, yeah? Balance brought down, 14,680. So you have adjusted the cash book now. So it means that what? The real figure that we should be having in the cash book is 14,680 and not 13,560. You can see that the question, the balance as per cash book is what? 13,560. So there's an error. But we have now adjusted what? We have adjusted the error now. So the new balance is now what? 14,680. Then the question we are asked to do is balance as per bank statement. After we have adjusted this, we can now prepare our what? Bank reconciliation statement. Okay? So we have bank reconciliation statement. Bank reconciliation statement. So what you are going to have is what? Balance as per adjusted cash book. You have adjusted the cash book now. So you have balance as per adjusted cash book. Now that we have adjusted the cash book, our new balance is now 14,680. So we can go ahead and prepare the bank reconciliation statement to ascertain our what? Balance as per bank statement. So balance as per adjusted cash book, 14,680. 14,680. What do? You add your unpresented check. Unpresented check. Unpresented check. We are going to add. So let's come to the question. Our unpresented check is 5,120. So we have 0. All right. So after we have adjusted our cash book, the balance as per adjusted cash book is 14,680. So you have balance as per adjusted cash book, 14,680. Then the next thing, you add your unpresented check. Our unpresented check here is what? 5,120. So this will give us what? 19,800. Okay, this is a 0. That should be 19,700. Let's look at it. 14,680 plus 5,120. Yes, that's 19,800. So the next thing we subtract our uncredited check. What's our uncredited check? Our uncredited check is what? 2,300. So 19,800 minus 2,300 will give us what? 17,500. So these are what? Balance as per bank statement. So let's look at the options. The option, our answer is going to be what? Option A, 17,500. Now the second question, what is the adjusted cash book balance? That is the second question. Question 24. What is the adjusted cash book balance? Of course, we have already seen the adjusted cash book balance here to be what? 14,680. So our correct option is what? Option C. All right. So this is UTME 2009, question 14. We have balance as per cash book, 20,000. Unpresented check, 5,200. Direct credit to the bank. Direct credit to the bank is also the same thing as credit transfer. Like I told you, your credit transfer will be on the debit side of your adjusted cash book. That's 1,000. They have direct debit from the bank. Direct debit from the bank is the same thing as direct debit, which is going to be on the credit side of your adjusted cash book. Then you have credit in the cash book. This also stands for what? Uncredited check, which is 500. So what are you asked to calculate? You have to calculate the balance as per bank statement at the end of the year. So before you can calculate the balance as per bank statement, the first thing you need to do is to adjust your cash book. So we are going to prepare adjusted cash book. Adjusted cash book. I told you any transaction that we increase the cash will be on the debit side. Any transaction that will reduce the cash will be on the credit side of the what? Cash book. So let's go. We have balance as per cash book. That stands for our balance brought forward, which is what? 20,000 naira. Direct credit to the bank. It will be on the debit side. On the debit side. Direct credit to the bank is 1,000 naira. Direct debit from the bank, that will be on the what? On the credit side here. Direct debit from the bank, which is what? 1,000 naira. Okay, so here we have 21,000. So we have a balance carried down. 21,000 minus 1,000 will give us what? 20,000. So the total is 21,000. So you come here, you have your what? Balance brought down, which is what? 20,000. Take note, your balance carried down is what is brought down. So what's the next thing you do? We can now prepare the what? Bank reconciliation statement to get our balance as per bank statement. So we have bank reconciliation statement. Now, we have adjusted our cash book. So you come here and write balance as per adjusted cash book. How much is it? That's 20,000. You write it down. Then what do? You add your unpresented check, which is the same thing as outstanding check. Our unpresented check is 5,200. So 20,000 plus 5,002 will give us what? 25,200. Then we subtract with less uncredited check. Uncredited check. So our uncredited check is what? 500 naira. So 25,200 minus 500 will give us what? 24,700. So this figure stands for what? Balance as per bank statement. Okay, so correct option is what? Option A. All right, this is UTME question 2024, question 19. An examination of the cash book on 3rd August 1993 showed a different balance from the bank statement of 31st July 1993, which read 722 naira. So this figure is the bank statement balance, not cash book balance. Take note of that. Now, uncredited checks were Bimpe 40 naira, Wale 60 naira, while unpresented checks were Usman 20 naira, Kalu 32 naira, and Musa 70 naira. Now the question is this: what is the cash book balance after reconciliation? So what are we going to do? First, let us add together the unpresented and uncredited check that we are having. We have uncredited check, uncredited checks. Okay, the first person we have is Bimpe, which is 40 naira. Then we have Wale, which is what? 60 naira. So when we add these two together, we have 100 naira. Okay, so let's move to unpresented check. Unpresented checks. Unpresented checks were Usman. Usman is 20 naira. Kalu is 32 naira. And we have Musa to be what? 70 naira. So when we add these three together, we have 122 naira. So now we can now what? Calculate the cash book balance after reconciliation. Now, take note that we have three methods of solving question under bank reconciliation statement. If you are starting with the cash book balance, the rule is that you add unpresented check and subtract your uncredited check. But if you are starting with the bank statement balance, you add uncredited check and subtract unpresented check. So in this case, what we are giving is not the cash book balance. The 722 is the what? Bank statement balance. So what we are going to do is that we are going to add uncredited check and subtract unpresented check. So we have solution, balance as per bank statement, which is what? 722 naira. We will now add uncredited check. Uncredited check. Our uncredited check here is what? 100 naira. And that will give us 822 naira. So we are now going to subtract less unpresented check. Unpresented check, which is what? 122 naira. So this will give us what? 700 naira. So this is now our balance as per cash book. Take note, balance as per cash book, not balance as per bank statement. Okay? So this balance as per cash book. So from here, the correct option will be what? Option C.